Hey guys, it's a Dividend guy coming at you with a Robinhood portfolio update. Happy Monday. Hopefully everybody is having a GGD, a great good day in the market. You know, I always wish the best for my viewers and subscribers. Speaking of subscribers, we actually hit the 500 mark. So I do want to apologize. I took a week off just to kind of, have a personal week. But I want to come back, hit the ground running with more portfolio updates starting today. So we did hit 500 subscribers. Thank you guys so much. I'm so excited. Um, and I did buy more shares of Aflac, but today we're going to jump into the overall portfolio, how it's been performing. I know there's been a lot of market volatility with GameStop and other holdings like AMC and Bed Bath and Beyond, and it's been pulling the whole market down. It seems like so. The returns aren't going to be as great because of the market volatility, but I'm still confident in the stocks that I hold, and I realize that it's a short-term thing. So, congratulations to anybody who's been making a killing on GameStop, by the way. I know it's been kind of a rebellion against the hedge funds, which I wish I could have jumped in on, but it doesn't fit my investment style. So I'd rather stick to my guns and invest how I've researched instead of being a rebel. But anybody who who decided to be against the system and make some cash, congratulations. I know there's some people who have made millions of dollars off of GameStop stock, which congratulations to them. But I just wanted to touch base on that because I know I've gotten a lot of comments on it on Instagram and whatnot. I'm all for Wall Street bets and retail investors, making a profit at the expense of these hedge funds because they have billions, and usually it's the retail investors that follow suit to the big hedge funds. But it's nice to see the little guy win. So for today, we are down about $30, down 1.2% for the week. This is about when the Wall Street bet stuff started, so I knew I was going to be negative. We're down $1,100, down 4.34%. For the month, we're down $50, down 0.02%. 3 month mark, we're up $3,200, up 14%. For the year, we're at $1,500, up 6.5%, and all time since April 13th of 2018. So we're going on with 3 years of investing here, guys. It's crazy. We are up $2,900, up 13.2% since April 13th of 2018, which is great. So almost 3 years here. We have $3.29 left after my Aflac purchase. Again, I keep getting these notifications from Robinhood because they're limiting the amount that people can buy on certain securities, and the market volatility has been a lot. Like there's been a lot of up and downs. That's why I didn't post videos last week because it was crazy because they kept freezing my account, and yeah, it's just weird. Um, but let's jump in and see how we're doing with Realty Income. Dividend aristocrat under $60. I would buy it even though my average cost is below that. Um, 20 shares, almost $1,200 of market value. Average cost is $48.45. 4.78% of the portfolio is in Realty Income. Up $8 today, up 220, up 22% on them. I want to add some more of them this month. I get paid on Friday. But I'm going to try to focus on Aflac. So, according to my buy schedule, this week will be Aflac, and then next week should be either Allstate or W.P Carey. It kind of depends on what I decide to do. Oh no, sorry, it should be Allstate for next month. So it should be Aflac until the 15th of February, and then Allstate I can buy until the 25th. So the first check will go to Aflac, second check will go to Allstate. So, but I do want to buy some Realty Income along with that as well. Then we have Coca-Cola, my favorite drinky drink. I'm drinking it right now. We have 21 shares, $1,000 of market value. That will be going up. 51.39 is our average cost. 4.1% of the portfolio is in Coca-Cola. We are up $9 today, down about 60 total. Down 5.4%. Not worried about it. Love Coca-Cola, and I believe they're below my average cost too. So it'd be a great time to buy them. But like I said, I don't get paid till Friday, and they are not the stock that pays me next month. They're not in that group, so I will not be buying Coca-Cola. Next, we have FRT, another phenomenal buy, which it has been for a long time. I just didn't have money to allocate. But again, not the set of months that pays me next month. 36912 does. So we have one share, 85.65 for market value. Average cost is 113.40. 0.34% to the portfolio is in FRT. We are down $1.91 today, down $27 total, down 24%. Easily a cost on average opportunity because, as you guys can tell, usually when I initiate a position, I don't buy that many shares. because I don't want to get locked in at an average cost. The only time that I bought in bulk was actually AbbVie because I knew that it was undervalued, like very undervalued. With this, at 113, I knew that it was in between the high and the low, but it was closer to the 52-week high, so I bought one share. Happy I did. Now, when I reallocate capital to FRT, I will be lowering my cost basis by like $20 a share, so that's phenomenal. Next, we have Altria. It's my big payer for this set of months, and it is definitely a buy for me as well. We have 151 shares, which I might put some cash towards this one. I know it's a big position, but I have been lowering it due to allocating capital to other stocks. $6,100 of market value, 43.59 is our average cost. About 24.6% of the portfolio is in Altria. That used to be up to like 27%, so that has been going down because I've been allocating capital to Aflac and Realty Income. Down $61 today, down 440, down 6.7% on Altria. Then on to the next set of months, we have a buy definitely for me in AT&T. Have 126 shares, $3,600 of market value. Average cost is $29.68. About 15% of the portfolio is in AT&T, up $25 today, down 106.42. And we do have a dividend coming in of $65.52 from AT&T, which is enough for an Aflac share. So on February 1st, I should be able to have enough capital to, excuse me, to buy an Aflac share, and I believe AbbVie pays quick enough for me to buy a share of Aflac with it as well. So I might be able to get 3 shares of Aflac for free. We'll see, but that's the goal anyway. But for this set of months, AT&T is still the goal stock because they are cheaper than 3N, and they pay about the same dividends, or they do pay the same dividend. So I'd rather pay $30 for 52 cents than $40 for 52 cents. So I'm still going to be focused on AT&T and of course the real estate because that's where my goal really is. But I can't really overlook AT&T at these prices. Next we have AbbVie, the other big, well, the really big payer for this set of months. I say AT&T is because I can still buy that. AbbVie's at such an inflated price, I don't want to touch it. We have 60 shares, $6,100 of market value. Average cost is $72.22. About 25% of the portfolio is in AbbVie. That will keep going down as I allocate capital to other positions as well as dividends. We're up $1 today, up $1,800, up 41.92%, and a dividend coming in of $78. Phenomenal. And they pay on the 16th, which like I said, I still do believe that that's in line with being able to buy Aflac stock. So I should be able to buy with $120. I should be around 3 free shares of Aflac with dividends. So that's great. If not, it's 2 shares, which is still great. I'm happy with that. That's compounding at its finest. Then we have 3N. We have 20 shares, about $790 of market value. Average cost is $42.12. 3.16% of the portfolio is in 3N, up $6.20 today. Down $16.20. 16.30 total. Have a dividend coming in of $10.40. So I added at least $10 of passive income to my total last month. But I also bought Realty Income. I bought National Retail Properties, and I bought General Dynamics. So altogether, I believe I added about $15 of passive income to my total. But then when you add in the other stocks that I bought as well, it's even more. So I added at least $15 of passive income to February, which is phenomenal. Speaking of, we have 3 shares of General Dynamics at $4.43 for our market value. Average cost is $153 and some change. 1.7% of the portfolio is in GD. 1.35%, $1.51 up today, 0.8%. Total, we're down 18.12, down 3.92%, and a dividend coming in of $3.30. Then we have Aflac, my favorite insurance stock. We have 15 shares, $679 of market value, $45.59 is our average cost. So a little bit of a cost on average opportunity here. 2.73% of the portfolio is on Aflac. That will be close to like 17 to 20%. Like I really want Aflac to be a big position. We're up $1.80 today. Total, we're down $441.64. And like I said, I will be allocating capital. So I will be using the dividends from Altria and from AT&T to buy shares of Aflac. at least 2 shares, and then this Friday I get paid. I've already paid my bills for this month, so I should be able to allocate a decent amount of capital, maybe $500, so another 10 shares. If I can get to another 15 and make it an even 30, I totally will. But as you guys can see, that's about $700, so I might be able to do it. If I can get 15 shares again, I'll do it. And then the second check of the month, I'll pay my bills for next month, and whatever capitals can be allocated, I will put that towards stocks that pay me in January, which I think will be W.P Carey and Allstate. But if FRT stays at that good of a valuation, then I'll be buying that as well. So I'll make sure I spread the love around a little bit there. Then we have Black Hills. We have 2 shares of this utility, about $120 of market value. Average cost is $60.53, so a little bit of a cost on average opportunity here, but it's a great spot to buy the stock at $60 because 87 is its high, so at least $17 of upside there on the stock. About 0.5% of the portfolio is in Black Hills. I want that to go up, but it's not a main focus for me. $1.26 we're up today, down $1.56 total, down 1.3%. Then McDonald's, 2 shares, $416.80, $214.90 is our average cost. Portfolio, 1.6% of the portfolio is in McDonald's. That will be going up. I want this to be a larger position, but the problem for McDonald's is in this bracket we have a lot of insurance. We have Aflac, which is going to be about 10% of the portfolio. We also have Travelers, which I want at about a 7%, and then Prudential I want about 5%. So I do want McDonald's to actually be above Prudential, but I want it to be below Travelers. But I feel like it probably will be above it just because I want real estate to have overall. I want it to go for every section that it's possible. I want it to be an insurance stock. So say like Allstate and then FRT or W.P Carey, whichever one's a better value. And then the second set of months I don't have an insurance stock. So that will be like 3N or Procter and Gamble and 3N, and then the third set of stocks will be Aflac, McDonald's, and then it'll be Travelers. So I want real estate I want it to go insurance for the first holding to be the biggest percentage, and then a real estate stock. So McDonald's will be the second biggest for the set of months in time. I do want to be focused on insurance first and then allocate capital towards the real estate. But we're up 95 cents today, down $13 total on McDonald's. Then we have Prudential, another another insurance stock. We have 1 share, $78.19 is our market value, $82.47 is our average cost, 0.31% of the portfolio is in Prudential. I do want to add more to this because it's undervalued currently. It has almost $20 of upside because it'd be $98. So, yeah, I definitely need to buy Prudential. I might even buy Prudential over Aflac this month. I do. That's the problem here for me is I want Aflac to be the biggest. It has great dividend growth. The problem that I run into is Prudential actually pays a really big dividend. Pay $1.10 for $78, and then Aflac actually pays 33 cents for about $46. So if you double it, 80, so $92 versus 78, it'd be 66 cents for Aflac and $1.10 for Prudential. So you actually come out ahead cost-wise and dividend-wise with Prudential, but I like Aflac better due to the dividend growth, the dividend growth history. But I might allocate more capital to Prudential just because I've been focused on Aflac so much, and it does boost my dividend income now. That's the thing is Prudential is boosting it now, as in the amount that it pays is really substantial versus Aflac as a future projection. So that's kind of the tie up there. But I do want to buy Aflac. I might split it between Prudential and Aflac though, and I'll see how I feel with that. Especially if it stays at especially if Prudential stays at these levels, for me it would be like an FRT. Then we have J&J, Dividend King, quality company, want more shares, but I see I have other focuses in the market currently, but it will be a pretty big position. 2 shares, $327 for market value. Average cost is $135.79. 1.31% of the portfolio is in J&J. Up $1.02 today. Up $55 total. Up 21% or 20% on J&J. And then ExxonMobil, the big payer for this set of months. We have 86 shares, $3,800 of market value. Average cost is $52.74. About 15.4% of the portfolio is in ExxonMobil. I believe that was around 17% before. So just due to reallocating capital, the big stocks are going down, which was the goal for this year. We have $11 down today, down $690 total, down 15%. You guys know that doesn't bother me at all. This has been down to like $42. So I've been down like $1,400 on the stock. So being down about 700 doesn't bother me at all. In fact, I'm gonna probably allocate that much capital or more to the portfolio overall, so it'll balance it out. That actually rounds out the portfolio. So guys, currently the goal is to buy more Aflac or Prudential for this set of months with my next check. I'll make sure I do get paid on Thursday night at midnight, so I should be able to allocate capital Friday morning if everything goes smoothly. So I'll be able to do that for you guys on Friday. You'll get 2 videos. But let's jump into the watch list, which there have been some back and forth. I did get rid of Disney because I wanted Chubb. Because I think insurance is better than Disney. It pays a dividend, a growing dividend, so it fits the overall portfolio better. Right now, I believe I have, let me count real quick for total stocks: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, so 14, 15, 16, 17, 18, 19, 20, 21. So I'm not counting Berkshire in my total because they don't pay a dividend. So I have 20 stocks plus Berkshire, and that's about what I want. I wanted about 20 to 25 holdings total, and I wanted insurance to be a really big part of that, as well as real estate, which is exactly what I have. And Berkshire actually adds to the insurance as well, because they have Geico, Gen Re, National Indemnity, and Swiss Re, and a bunch of other insurance companies. They have like 10 different subsidiaries of insurance, so Berkshire fits the portfolio perfectly. Just doesn't pay a dividend. But let's look at the stocks on the watch list. So W.P Carey is going head to head with FRT. It does not have the same growth, so I would rather put the money into FRT currently, but especially because FRT's down so much. But W.P Carey is at 66 and it has $22 of upside, or on $21 of upside. So right now, W.P Carey is actually a better buy for the dividend that it pays and the price that it's at. So they pay around the same dividend. It's just FRT is about $20 more. So right now, I would rather put money into W.P Carey. Nothing against FRT at all. Love that stock. And I probably will allocate a little bit of capital towards it. If I put, let's say this next month is February, so I'll be buying Aflac and Prudential. But come March, I will be allocating capital towards FRT and W.P Carey. And I might add some shares of FRT just because I want that average cost to go down, but the majority of the funds that I add for that month will go to W.P Carey and Allstate. Then, of course, we have Allstate, my insurance pick for this set of months, at 108. Definitely want to be buying it here. They have great double-digit growth rate, and they're in my main focus for this set of months. The reason W.P Carey is ahead or on the watch list is because it's got more upside. Then we have Chubb. This is another insurance company. I just like Allstate a little bit more, but they do have dividend growth. This is the same battle with like W.P Carey v. FRT or Travelers versus Aflac. On paper, Chubb is better. Dividend-wise, I like, for the price, but Chubb actually has more growth, so that should be the bigger focus for me, but I like Allstate a little bit better. But at 147, it has about $20 of upside as well. So we'll see. It might switch. The problem with videos, like when you record them versus when the stocks are going to be bought, Chubb's not going to be bought for another month. So if Chubb goes down more, I definitely will be allocating capital towards Chubb. It just depends on, I go for what pays the best dividend for the lowest price every month. And I allocate capital towards that stock. And then when there's a tie, like I said with W.P Carey or FRT, then I'll split it into, whichever one into both. So it depends. But Chubb is actually the one that I want to be focused on over Allstate. Then we have Procter & Gamble at 129. Definitely buying it there. Clorox at 209. I know that's a buy. Travelers at 137 is a buy from year 2. And then Berkshire Hathaway at 229. Doesn't have as much upside, but it's a huge insurance conglomerate. So I know they own other businesses. They have brick businesses. They have flight simulators. They have retail chains, they have candy. They're just so diversified, as well as like Kraft, Apple, bank stocks and whatnot. So I know Berkshire is crazy diversified, and that's why they're my exception to my rule. But currently, guys, the buys that I see within the portfolio are FRT, AT&T, and Aflac and Prudential on the watch list. W.P Carey and Chubb are both buys for me. Procter and Gamble is a buy, and Travelers is a buy, as well as Clorox and Berkshire. So there's a lot of buys right now due to the GameStop volatility, which thank you retail investors, but I can't allocate capital currently. But on Thursday, I will get paid at midnight, and I will be buying stocks for 36912, which currently allocation says I will be purchasing Aflac and Prudential. So with that being said, guys, thank you so much for watching. I'm so happy to be back. Thank you, guys. We hit 500 subscribers. Remember, if you guys haven't subscribed, hit the subscribe button. I post a video Monday through Friday. And I'm super excited to be back. So thank you guys so much for watching. Remember to hit the like button, hit the subscribe button, and the bell notification so you don't miss any updates. See you guys tomorrow with another Robinhood portfolio update. Take care.